Good afternoon. George Cavaligos for HFT Bonds Notes. Long holiday weekend coming up, and it's a little bit before the close of the pits here, but it looks like we're either going to put up a doji, spinning top kind of thing, or a bearish close here if we can get the negative closes. Right now the notes are down, 2 ticks, and the bonds are up a tick. So I think we'll end up with the doji. It'll be indecisiveness. I want to sell rallies. Hope you guys got the chance to see the email that I just sent out. And you guys that are not subscribers, take a shot. 7-day free trial. Come on, join our little club. We're going to try and teach each other a lot. And let's see. The chart is pretty self-explanatory, I hope. If the bonds stop against the current highs that we put up last night, we have a potential of a flat corrective pattern here on that June daily chart. If you look at the active rollover chart, it's a little different. It still points a little bit higher. The target of that is the top of that gap, basically, the 146.5. Is it 146 or 145.5? Sorry, guys. 145.5 level on the active chart. That would fill the roll gap. We're in a fifth wave off the recent lows on the bonds. The only thing we're looking for now is a solid, sell signal. So you want to be getting out of longs on rallies. You want to be putting on shorts on upticks here and looking for a solid reversal signal that you can put on some kind of a core or a swing short position. If we do get a swing from here, from a flat corrective pattern, it projects back to the old lows. What was that, 140.5? I think so. We're looking at upside risk 1 point from where we're at right now. Downside risk 5 points. It's a pretty good risk-reward pattern there. You can improve your odds by waiting for some kind of solid reversal signal, which we don't have yet. These holiday weekends, especially this long holiday weekend, in the States, it's a 3-day weekend. As of Globex close today at 4 o'clock Chicago time, there's no trading until Sunday night, Asian hours at 5 p.m. Chicago time. So, we've seen a lot of news type events occur over these long weekends. Last year, I want to say the market gapped higher over this weekend and left a pretty important gap. We've talked about it before. If you guys recall, on the cash 10-year, there's this gap. I want to say it's 207 to 214. That was the gap that we left last Good Friday. Now, I think last Good Friday was also an unemployment number, so maybe this weekend isn't that big of a deal. But there's risks with all these long weekends. The markets will reverse quite often on these long weekends. We've seen it time after time, or on a holiday, time after time, where we see these important reversals. So be warned, be wary, be on your toes. Take a look. Maybe we're supposed to be buying TBF, buying some puts. I'm sure the options and the treasuries are fairly cheap right now. Maybe put your toe in the water a little bit. That's what I'm saying here, guys. Have a great Easter. Greek Easter isn't for a while, but I'll throw this out to my Christian friends. Christos Anesti. And I'll see you guys. I don't know if I'll be in on Sunday night, Monday morning. See you then.